Right. What's up, family and friends? Today I'm going to be talking about Bitcoin and why this can possibly make you guys very stinking rich in the process of investing. Now, the reason why I am making this video is actually so that just because I think this knowledge is useful and I just don't want to keep it from you guys. I'd feel bad if I got rich from this and kept this information to myself. It's a confusing topic, and the more you know about it, the more you really like it. So, with that started, I'm going to include timestamps right about here. So that way you could skip and fast forward ahead. Now I'm going to have this, if you are new to crypto, feel free to take your time, watch it. It's going to be a longer video. And if you know more things about crypto, especially Bitcoin, then feel free to skip ahead or fast forward and keep it on a faster speed on YouTube. But to start, I'm going to be talking about the fundamentals of Bitcoin, going from not even a cent to possibly $1 million one day. Now, let me just talk about what Bitcoin is. Bitcoin is it's basically a peer-to-peer network with transactions. And this first concept of the Bitcoin network was called the Bitcoin White Papers. And this was actually published on October 31st in 2008 by a man named Satoshi Nakamoto. Now, no one knows who this guy is or why he chose to remain anonymous. He holds over, we're estimating around 1 million Bitcoin. And we haven't seen any activity from him since, I think, 2011, I believe. And this could be for a number of reasons. This could be so that it doesn't get traced back to him. He doesn't want the publicity, or governments can't imprison him for making this system. There's a lot of theories on why he remained anonymous. A lot of guesses are that he's actually from the UK because of his grammar used in the Bitcoin white paper. But no one knows. Like I said, no one knows. He could be dead forever. All anyone knows. Now, basically, although it was the concept was created in 2008, it wasn't until 2009 that it was actually first created. And when I say mined, this is basically the first transaction that ever happened was in 2009 on January 3rd. So a little bit after he published his white papers, he actually did this. And this is what's known as the Genesis block, the first block that started them all. So now that we got that out of the way, I'll do a little interesting segue. Now, a lot of people know, if you're into crypto, a lot of people have heard of the $200 million pizza. Basically, a long time ago, someone paid, I think, 10,000 Bitcoins for two Domino's pizzas, which were worth roughly $30 at the time. And once Bitcoin hit its high of around 20K, this person just missed out on $200 million worth of money if he kept it and sold it at the high. So he'd be very, very rich. I'm sure this guy still is pretty rich, but he could be a lot richer. Now, let me just talk about what Bitcoin is. All right. So basically, if you don't like the current financial system, you can opt out. And this is a really peaceful way of opting out. There's no protests needed, no riots in the streets. You could just use Bitcoin like I have, and then you're completely out of the financial system. Now, there is a difference between Bitcoin and BTC. Now, Bitcoin is actually the network BTC runs off of. BTC is like the ticker, the what you're actually buying or trading. BTC is run on the Bitcoin network, which operates off of this, but people use them pretty interchangeably. But just so you know, they're two different things. Now, another thing is it's a peer-to-peer network for payments and transactions. And basically, what this means is every network, every miner, every verifier or validator is all connected as one. And everyone uses the same coding and algorithm to run the Bitcoin network. So that's why it's peer to peer. So another thing that confuses a lot of people is its anonymity. Now, Bitcoin is actually completely anonymous and still yet it is transparent. And this is because all the transactions on the blockchain are a long list of numbers and letters. And every time a transaction's ever made, it's going to show this on the network. You could see every single transaction, which makes it transparent. But the only thing about it is you don't know who sent the money or who received it. You could know how much was sent and received, when, and what network it was traded off of, like what exchange or something like that. And it's it's yeah, I would say it's impossible to track who is actually sending these, so governments can never even know about it really. Um, Another thing about it is it uses the blockchain technology. Now, let's just keep in mind that Bitcoin did not invent blockchain, but it did make it mainstream. I think blockchain was invented in the 80s as a way to timestamp something, but it wasn't until Bitcoin's case where it actually became very mainstream. And blockchain is being used in a lot of technologies now today because of Bitcoin, bringing it to the forefront. And also, Bitcoin is a proof of work system, which basically means you have to mine Bitcoin to make sure it's true and validated. So every time so the problem, Satoshi's problem was he wanted to find a way for there to be no central authority of this while also making sure no one double spends money, meaning there is no money disappearing and there is no money appearing out of nowhere. So you can't just make new Bitcoin because it has to be verified by over 10,000 people. 10,000 miners have to verify that it actually happened. And that's why it's called proof of work. It's also protocol based. Now, let me just tell you what protocol based means. It basically means that on the whole Bitcoin network, everyone has to run the software, like I said before. And this software, the only way to update it is if everyone on the network agrees to the update, and everyone has to adopt to the new um, protocol based system. Now, another examples of protocol based systems are email. Email is protocol based. The internet's protocol based. Now there are flaws with protocol bases, and there's also good things. Um, Protocol bases are in place so that way it's very, very, very hard to change it unless everyone agrees upon. Which try getting everyone to agree upon, especially a 500,000 people, and this causes some disputes. But it just makes sure that if there is some needed change, it will get done, but nobody can completely take over the network without having everyone on board with it. Now, this is good. Um, so yeah, it's microtransactions. So you could actually have all the way to a millionth of a Bitcoin. So a lot of people will say, if I say like buy Bitcoin, they'll be like, well, Bitcoin's $7,000, $8,000. I can't afford that. But the cool thing about Bitcoin is actually they're the ones that started microtransactions with this, and you could get all the way to a millionth of a Bitcoin, which is called one Satoshi, named after the creator, Satoshi Nakamoto, which is actually, I forgot to mention, that's not his real name. No one knows who this is. Like I said, it's just an alias. Um, but yeah, you could buy a millionth of a Bitcoin, which is fractions of a cent. And the reason why this is good is as the more people use it and the more the price goes up, the easier it is to make transactions of even cents. Because a lot of people in Africa can't even afford to have a bank account because they don't have enough money and it's too expensive for them. So they could use something like Bitcoin and they could buy like 20,000 Satoshi, which is pretty reasonable. And they could be banked now. So that's the beauty of it. It unites everyone across the world for a centralized, not a centralized, a decentralized currency worldwide. Now, another thing I want to mention is that people compare today to digital gold. And this is because before previously thought, everyone thought it was going to be used for transactions, but we actually don't see this as the case. They call it digital gold because it's basically it's like gold. You hold your wealth in it over time and you won't lose the value you had in it because of inflation. And that's basically why they call it digital gold. I'll go into more detail on all these in the next slides. But moving on, some misunderstandings. A lot of people say, why would I invest in something so volatile like Bitcoin? Because um, it goes down, up and down, like 5, 10% in a single day. I think a couple weeks ago, it actually went down 40% in like 2 days, which is like ridiculous. It's extremely volatile. Now, this is good and bad. If you're a trader, this is really good because then you could get in and out and you can make lots of money. But if you're someone like the average person who just wants to buy it and hold it, the volatility can be a little bit scary. I actually lost roughly a half a grand on the volatility because I wanted to trade over my Bitcoin from one exchange to another. And it's pretty hard, but I said it's digital gold because it is and it's a store of wealth. But right now, we're still in the beginning stages of Bitcoin, believe it or not. Only 0.4% of the world actually owns Bitcoin, according to the wallets. It could be even less. So the more people adopt Bitcoin, the higher the price goes. The higher the price goes, the more stable it goes, and the less volatile it is. So then it'll start to be very stable and it starts to be the real store of value. Now, another thing is that the Bitcoin network is free. It is free. You have to pay microtransactions to actually buy and sell Bitcoin. Not even through the exchanges. You have to buy. You have to pay the actual miners, the validators of the network, and it's really not much. I did it for the first time last week, and I bought $1,500 worth of Bitcoin, and I think I paid $8 in fees, and that was maker fees, and it's so low. I should explain that. It's not even $8 because that was for the actual exchange fees. When I was trying to transfer it, it was like Satoshis, so like cents on the dollar, like hardly anything. I think they had a little bit ago they had maybe like 6 months ago they had a transaction of over $1 billion, and the whole fees for it was under 2,000. I know that for a fact, and that's just incredible. 2,000 sounds like a lot, but when you're sending $2 billion over, try doing that in with the banks. They'd pay you hundreds of thousands of dollars to do that, and they did that in under a day for $2,000 less. Could be even could be even as low as 50. I to be honest, I forgot the actual numbers, but still, it's extremely low. I just want you to know that. Um, People say, well, isn't Bitcoin only used by drug dealers? And for this, I say no. You know what's the number one most thing used by drug dealers? The number one currency? US dollars. Why do you think it is that the $100 bill is always have trace amounts of cocaine on it? It's not only being used by drug dealers. Drug dealers can use it. The smart ones would use something like Monero's, which is completely untraceable. Remember how I said it's Bitcoin's transparent and anonymous? Monero's anonymous and non-transparent. So if they're smart, they would use something else. So the idea that only drug dealers use this is complete crap. I just want you guys to know that. Um, People say Bitcoin isn't backed by anything. And to that I say no, it is. It is. It really is. It's backed by the network. It's backed by the code. It's backed by the people that run the code. So basically, Bitcoin has never been hacked. There's never been anything wrong with the coding because of its because it needs 10,000 people to verify a transaction actually happened. So you're backing in you're backing in the code. And the code is right now worth like 150 billion plus. So it's not like this code is just a bunch of crap. It's got actual value and it's just going to go up from here. Now, a lot of people say Bitcoin's a Ponzi scheme because it's not backed by anything, and the only way the price goes up is based off of the more people put into it. And you know what I say to that? I say the US dollar is a Ponzi scheme. People might say, well, it's backed by the US government because they could print as much money. Yeah, but it's the exact same concept. The only way the US dollar goes up is if more people want the US dollar. Do you really want to be backed by the government who's inflating your dollar and reducing your purchasing power every year? It's just complete crap. It's not a Ponzi scheme. If it was a Ponzi scheme, it would have failed by now. And we see this is not the case. Now, they say the governments cannot regulate Bitcoin. Um, Governments can regulate Bitcoin. It's just, let me say, it's extremely hard to because of uh, because of its anonymity. So what the U.S. government is doing right now is they're banning all exchanges that don't comply to the U.S. standards. And the U.S. standards, they're asking for basically your social security, your driver's license, all this information, so that that way they can know when you buy and sell. But like I said, it's so hard to track it. They can track it, but they could barely track it, I would say, and regulate it. Um, Bitcoin is a payment system. So now everyone thought Bitcoin was going to be the next payment system in the last bull run of 2017 when it hit $20,000 and literally everyone around the US was saying buy Bitcoin. It's not a payment system. I just want to say that right now. Unless the developers are working on making it a payment system, but right now I would say it's more of a store of wealth over time. And this is because Bitcoin's transactions per second speed is roughly 7 transactions per second. And that's just not simply enough because Visa operates, I think they have 4,000, no, 2,000 transactions they're doing per second around the world. So seven's complete shit compared to Visa. And Visa can actually all the way operate up to, I think, 20,000 transactions per second. So they have the capability. Bitcoin really does not. You have to wait in a line. The line's really, I've done it and it doesn't take that long, but you still have to wait. It's not immediate, and that's why it will not. I don't think it'll be a payment system for at least the time being until the developers of Bitcoin are making more groundbreaking news with it and segue. Now, people say, well, which Bitcoin do I buy? You say buy a Bitcoin. Which one should I buy? Now, let me just say, there is only one Bitcoin. There are a lot of these other currencies like Bitcoin Cash, Bitcoin SV, um, all, Ethereum. There's so many, but I just want to tell you, there's only one Bitcoin. A lot of these came off of the hard forks off of Bitcoin, like Bitcoin Cash. Since basically I told you it was a protocol-based system, everyone had to adopt it, and some people had different viewpoints on it. Like Bitcoin Cash, they thought, hey, if we want this to be a used by everyone, we have to increase the speed. And the way they did this was increasing block size. Now, not everyone was on board with this because of the higher the block size, the harder it is for people around the world to mine, making it more centralized. So you have split offs from Bitcoin, and you'll have stuff like Bitcoin Cash, like I was saying, and Bitcoin SV, because they feel that Bitcoin can be better. Now, I don't think Bitcoin will ever be replaced. I really don't. It's been number one. I think it controls like 87% of the whole cryptocurrency market in market cap. So the whole market could be worth 200 billion. And I think Bitcoin is probably worth 170 billion out of that 200 billion. So there's nothing nowhere near close. Ethereum's catching up to Bitcoin, and that's because it's got different properties of Bitcoin. But I could make a video on Ethereum if you guys are interested. I own Ethereum myself. So like I said, if you want to buy Bitcoin, you buy Bitcoin. You don't buy anything extra in the name. It's only straight Bitcoin, BTC. Don't fall for these scams on the side. Now, people say there will never be another Bitcoin bull run. And my answer to that is no, that's complete horseshit. If you look at the Bitcoin charts, there's been bull runs roughly every 4 years. And every 4 years, people are saying there's not going to be another bull run, and then there is. And I'm going to be talking about why I think there's going to be I actually think there's going to be a super cycle. So I think it's going to go way past what it normally would have been thought of. So people have been saying this for years, and this is not the case. There's going to be another bull run, and I guarantee you it's probably going to be in the next 2 years. So this is the time to buy and buy heavy if you want to. Now they say, how do I know there won't be another Bitcoin? Well, like I was saying, Bitcoin's been the number one market cap of cryptocurrency ever since it was created. It was the first cryptocurrency ever. And the only way there would be another Bitcoin is basically if Bitcoin was flawed, but it has not been flawed and it will not be flawed. I'll go into more detail later. People say Bitcoin will go to zero overnight. I just want to tell you, how can something like a currency go to zero overnight? You can't overinflate it to near zero because there's a hard cap supply of Bitcoin at 21 million. So it's not like you could just magically print more Bitcoin. You can't. Another thing is the only way it would go to zero is if literally everyone who holds Bitcoin, people like me, people like basically the traders, the long term holders, the short term traders, the day traders, all of these people would have to believe it's worth zero. Because otherwise, someone like me is going to buy it when it goes down. And that's why I say it will never go to zero. It just won't, in my opinion. Now let's go on to my next slide. People say Bitcoin still exists? Yes, actually it does. Now, when I put in this chart, it was March 31st, so you can tell I've been kind of slacking on this video. I've had a couple takes with it. So, yeah. So you see this chart, it started off very, very low, and it's still here. It went all the way down to $3,000 after the big Bitcoin bull run in 2017. But it's actually regaining a lot of price. Right now, it's actually 7,200 at the time of this recording. Now, the reason I say it's better than ever is there's better hash rates, the highest hash rates we've ever seen, which basically means the hash rate is the harder it is to hack it. So right now, it's the best it's ever been. So it's even more stable in the sense that no one can ever hack it because the computing hash rate is the highest it's ever been. There's more validators than ever. There's more people that are holding 1+ Bitcoin in their wallets than ever. So there's more people than even here that are owning Bitcoin. So that's just a good sign. There's less of a supply in the next 30 days, less of a new supply, I should say, newly extracted Bitcoin. There's increasing regulations from the government. So now you're going to be seeing institutional investors and big banks and corporations. They're going to start to be able to actually invest in crypto because right now they can't because there's not as much regulations on it. And I think the regulations are a good thing because soon it's going to be on the stock exchange. They tried to make ETFs this year, but they were shot down. They've been working with them every year, and they're getting closer and closer every year to having Bitcoin actually on the stock exchange as an ETF. There's more developers than ever. This is because more people know about Bitcoin than ever. I'm sure all of you have heard of Bitcoin at some point, I hope. Maybe not you, Grandma Darlene, but everyone else. Um, so the more developers, the better the technology becomes. And that's why I say it's still here and better than ever. Now, moving on. Let me just say Bitcoin is your money. The reason it's your money is because no one can take your Bitcoins away. Not your sister, not your mother, not even the US government. The government cannot freeze your Bitcoin ever. Let me just say that. The only way they could get access to your Bitcoin is if you have it in an exchange and they freeze your account, or they physically take your Bitcoin. And I could talk more about that later about the wallets and how they would literally have to take it. Because I know people are going to say, well, Bitcoin's online. It is, but you could put them in actual wallets, not the wallets you're thinking of. I'll go into more detail on that later in the video. Um, yeah, no one can tell you how to spend your Bitcoin. No one can put withdrawal limits on your Bitcoin. Like I said, no one can freeze your Bitcoin. Nobody knows whose transaction is who. Nobody can stop you from using Bitcoin. This is the biggest one. No one can stop you. It's a protocol. Once the protocol is in place, it can never be changed and can never be stopped. And that's the beauty of it. Even if the US government doesn't like it, which they do not like it at the moment, they can't stop you from using it. It's impossible. The creator is in hiding, possibly even dead. No one knows. So therefore, they can't blame anyone to. They can't shut it down. It's in place. It would never be shut down unless the whole internet is shut down. And actually, they're working on making it so that even if the internet was shut down, they could use it over, I think like no, not telephone, radio frequencies. So even if the whole internet's down, Bitcoin will still be here, and it will be here forever. Moving on. Bitcoin is deflationary. Now, like I was saying, Bitcoin's supply can only ever reach 21 million ever. Ever. So the reason it's deflationary is because you might say, well, 21 million, that's stagnant. That's not deflationary. And for those of you that don't know what deflationary means, basically it means Bitcoin's value goes up every year as long as the demand stays the same. So this is because people every year, since Bitcoin and other cryptocurrencies are pretty hard to learn about, or just simple mistakes, people lose access to their Bitcoin wallets. And we've seen this in the news during 2017. A lot of people were extremely wealthy because they bought a couple Bitcoin, maybe like 50 Bitcoin back when it was like 50 cents or something like that. And it shot up to the moon. It shot up to the moon and they were worth millions, but they lost their flash drive and their hard drive to get access to their wallet. So it was completely gone. And now it's completely out of the circulation and the supply. And that is why it is deflationary. Now, another thing about the Bitcoin supply is, so we're actually not at 21 million Bitcoin right now. We are right about here. And every 4 years, which is rough, it should be every 10,000 blocks, which is roughly every 4 years, the supply of newly mined Bitcoin is cut in half. So right now, we are doing 1,800 Bitcoin mined every day. And these mined Bitcoin are to verify the transaction for the miners, and they're rewarded with these Bitcoins that are valuable. They're valued at like $10,000, or like I said before, 6,000 at the time of this, but 7,000. And they're having 1,800 of these a day. And in 30 days, this supply is going to be cut in half to 900. And this is huge because this completely reduces the supply and it helps to make the price go up. Because if there's less newly mined supply, the price will go up as long as the demand stays the same. And that is perfect. All right. Now, people have factored in this inflation. They know about this already. We're already at 18 million Bitcoin that are mined. So we're through the initial stages of inflation. And the reason for this inflation is actually a really smart design. Say Satoshi invented Bitcoin and there was only 21 million and we started off with that. The problem with that is the early investors would own a huge supply of the Bitcoin, and this would leave not much room for the new people to get in and get it at low prices. So then they would control most of the Bitcoin. So every year, as more people learn about Bitcoin and the more valuable it gets, there's more supply still coming in, so they could still get their Bitcoin. So it's not controlled by the people that own, uh, who bought it in the early days. They still have a significant portion because the early bird does get the worm, but it just makes sure that no one person controls most of the Bitcoin supply. Now, in 2140, all of the Bitcoin will have been mined ever. And they're going to be paying for the miners to validate, not only with once 2140 hits, not with just newly mined Bitcoin because they can't. It'll all be network transaction fees. And like I said, it was pennies on the dollar. So it's really not going to be that important to us for the transaction fees. Another thing I want to point out is notice how every year after the Bitcoin halving, which the halving is going to be May 2020, the price seems to go parabolic. It moves up really quickly. And this is why I wanted to stress this video, this and the coronavirus situation. I really wanted to get this news out there to my friends and family because we could see Bitcoin bounce up really high. And now I'm not going to say this is going to happen overnight or even within the next 6 months, but it could. And the reason why I don't think it'll happen immediately after the halving is it takes some time to add these 900 less Bitcoin mined a day to get into the circulation. So after a while, it'll have more of an impact than right away because a decrease in 900 a day in the first couple days, that's like such a small percentage of the total Bitcoin supply. So it's not going to be that big. But after a while, when these 900 less Bitcoin a day aren't mined, it's going to add up to a big chunk. And this is why we see the price seem to go parabolic afterwards. Not only that, the price has to go up so that these Bitcoin miners can make a profit. And I'm going to go into more detail on the mining process and what miners are. So now, first we got to understand the blockchain, which is the most important technology, the most important piece, I would say, of Bitcoin. And so we're going to play this short video, but before I do that, I'm just going to go over these brief points. Like I said, there's only 7 transactions per second being made on Bitcoin. And I said that the US government is actually experimenting with blockchain. So there is a lot of value in this. The government's using it. All these companies on the left are already using it. And like I said, Bitcoin did not invent this concept of blockchain, but it did make it more well known. So now I'm going to play this video because it explains it a lot better than I ever could.
Blockchains are incredibly popular nowadays. But what is a blockchain? How do they work? What problems do they solve? And how can they be used? Like the name indicates, a blockchain is a chain of blocks that contains information. This technique was originally described in 1991 by a group of researchers and was originally intended to timestamp digital documents so that it's not possible to backdate them or to tamper with them, almost like a notary. However, it went by mostly unused until it was adapted by Satoshi Nakamoto in 2009 to create the digital cryptocurrency Bitcoin. Now, a blockchain is a distributed ledger that is completely open to anyone. They have an interesting property. Once some data has been recorded inside the blockchain, it becomes very difficult to change it. So how does that work? Well, let's take a closer look at a block. Each block contains some data, the hash of the block, and the hash of the previous block. The data that is stored inside a block depends on the type of blockchain. The Bitcoin blockchain, for example, stores the details about a transaction in here, such as the sender, receiver, and the amount of coins. A block also has a hash. You can compare a hash to a fingerprint. It identifies a block and all of its contents, and it's always unique, just as a fingerprint. Once a block is created, its hash is being calculated. Changing something inside the block will cause the hash to change. So in other words, Hashes are very useful when you want to detect changes to blocks. If the fingerprint of a block changes, it no longer is the same block. The third element inside each block is the hash of the previous block. And this effectively creates a chain of blocks, and it's this technique that makes a blockchain so secure. Let's take an example. Here we have a chain of 3 blocks. As you can see, each block has a hash and the hash of the previous block. So block number 3 points to block number 2, and number 2 points to number 1. Now the first block is a bit special. It cannot point to previous blocks because, well, it's the first one. We call this block the genesis block. Now let's say that you tamper with the second block. This causes the hash of the block to change as well. In turn, that will make block 3 and all following blocks invalid because they no longer store a valid hash of the previous block. So changing a single block will make all following blocks invalid. But using hashes is not enough to prevent tampering. Computers these days are very fast and can calculate hundreds of thousands of hashes per second. You could effectively tamper with a block and recalculate all the hashes of other blocks to make your blockchain valid again. So to mitigate this, blockchains have something that is called proof of work. It's a mechanism that slows down the creation of new blocks. In Bitcoin's case, it takes about 10 minutes to calculate the required proof of work and add a new block to the chain. This mechanism makes it very hard to tamper with the blocks because if you tamper with one block, you'll need to recalculate the proof of work for all the following blocks. So the security of a blockchain comes from its creative use of hashing and the proof of work mechanism. But there is one more way that blockchains secure themselves, and that is by being distributed. Instead of using a central entity to manage the chain, blockchains use a peer-to-peer network and everyone is allowed to join. When someone joins this network, he gets a full copy of the blockchain. The node can use this to verify that everything is still in order. Now, let's see what happens when someone creates a new block. That block is sent to everyone on the network. Each node then verifies the block to make sure that it hasn't been tampered with. And if everything checks out, each node adds this block to their own blockchain. All the nodes in this network create consensus. They agree about what blocks are valid and which aren't. Blocks that are tampered with will be rejected by other nodes in the network. So to successfully tamper with a blockchain, you'll need to tamper with all the blocks on the chain, redo the proof of work for each block, and take control of more than 50% of the peer-to-peer network. Only then will your tampered block become accepted by everyone else. So this is almost impossible to do. Blockchains are also constantly evolving. One of the most recent developments is the creation of smart contracts. These contracts are simple programs that are stored on the blockchain and can be used to automatically exchange coins based on certain conditions. More on smart contracts in a later video. The creation of blockchain technology piqued a lot of people's interest. Soon others realized that this technology could be used for other things, like storing medical records, creating a digital notary, or even collecting taxes. So now you know what a blockchain is, how it works on a basic level, and what problems it solves. Want to learn how you can implement a simple block?
Okay. All right. Okay, yeah, so I hope that explained it a little bit better. It's kind of a hard, confusing topic, and if you still don't understand it, which it took me a long time to understand Bitcoin, especially the blockchain, just keep watching other videos and keep learning other things, reading something, or so on. Now I'm going to go on to my next point, or my next thing, I should say. Now that you understand blockchain, let's talk about the mining. Now, this is basically what the mining looked like on 2013 versus 2020. Today, there's millions upon millions upon millions of dollars, tens of millions of dollars invested into these mining operations. And what used to be run on something like a computer like this is now being taken over by people with a lot of money doing something like a mining farm. Now, basically, the first person to solve the cryptographic puzzle gets the reward. I think it's like 1 Bitcoin. And this is given every 10 minutes. Um, and what I mean is, all these transactions are basically encrypted, and the person, all these miners, all 10,000 plus miners, are competing for this reward. What they'll be doing is they try and solve it. They have to solve the mathematical equation, and the more people get on, the more people that are mining, the harder this equation gets. And this is why it used to be running on like a computer, and now it's running on big farms and factories like this. And once it's solved, the solution is sent to every single miner in there. So once it's verified that this is true, which I don't really know how it gets verified and stuff like that. It's confusing stuff. Just know it does. I'm not a computer expert, but I do know, I would say, enough to where I understand how this works. Now, once it's sent or once it's solved, it's sent to every single miner. So all 10,000 plus miners are going to get the solution, and the new problem is sent out for all these miners to be competing with. And that's why you see something like the higher the hash rate, basically the higher the computing power, the harder the equation becomes to hack. And this is why I say it's better than ever. Because you're competing with this. If you want to hack the network, you're competing with thousands of these. So it's really hard. Another thing I gotta mention is that one block is mined on average every 10 minutes. And basically, the system, Bitcoin's network, updates how hard the equation is every 2 weeks. And what they shoot for is around 10 minutes. It's not going to be exactly 10 minutes. It's not going to be, yeah, it's not going to be exactly 10 minutes, but it should be on average right around 10 minutes because it keeps changing the difficulty of it, which means the more computing power needed, which means the more people pay for mining, because you have to pay a lot of electricity. An estimated 2% of the world's electricity is going to this. It's going to Bitcoin's network. Here, let me put this on present better. It's going to Bitcoin's network. And this equation isn't just, it isn't linear. It's exponential. It goes up so quickly, so fast. So it gets really, really hard because all it has to do is add to the power of, it could go from 10 to the power of 2 to 10 to the power of 3, which makes it exponentially harder, which just makes it better. The more people that are validating it and the harder it gets, like, the more accurate the information is and the less likely it's going to be hacked. Now, think of it as being rewarded to basically lending your computer power. You're not actively sitting there. You're basically setting up these systems and letting them run. So you are being rewarded for lending out your computing power. And this is based off the newly mined Bitcoin, which I said are around 1,800 per day, are going to be split up between the people that accurately verified a transaction was true, and also the network transaction fees, the mining fees. So it's a confusing topic, and if you're still confused, look up more videos, read something, or even shoot me a text if you know me personally. Now, Bitcoin is actually proof of work. There's two main things right now, proof of work and proof of stake. Bitcoin itself is a proof of work network, which I already talked a little bit about. I think they're trying to make it, I don't know if it'll ever happen, but I've heard talks of making it proof of stake. And basically the difference is there's advantages and disadvantages to both. Let me go over Bitcoin's proof of work system. Basically, it's more competitive. because you're competing for that one Bitcoin every 10 minutes. So you're competing over 10,000. So that's why it goes from this to this very, very, very quickly. Because if you want to make money in this industry, you're going to have to put up the money. And you need 51% of the mining power to gain control over the whole network, which, if you look at the mining power right now, it's crazy amount. You'd have to invest billions of dollars just to hack it. And people are going to see this coming. You don't think they're going to see a big factory being set up to try and undertake the Bitcoin network? People would see it coming and they could get out if they really needed to. Another thing is about the mining power is if a miner wants to make a false transaction, they'll be cut out, like I said. And once they're cut out for good out of the network. So it basically incentivizes these miners to use good behavior. They'll make more money off of mining than they ever will trying to take over the whole network. Because if it gets hacked, or not hacked, if it has 51% of the mining power, and we could see how much percent of the mining power is there every day. So we could see it coming. And if people see this coming, they're going to get out of their position. So it wouldn't be in anyone's favor. Not the hacker trying to hack all the mining power, and not the people that own it. So it's in their best interest to just play it the fair and safe way. So this in turn makes it very safe. And disadvantage of it is it's really expensive to mine. A lot of these miners have to have the Bitcoin price at like $10,000 to make a profit, because they're spending like $5,000 just to mine one Bitcoin. So it's extremely expensive, and it takes up a lot of our energy. And the more expensive these miners' operating costs are, the more they charge a fee. And so this makes it more expensive for everyone. It's also the harder the algorithm gets for the equation, the more centralized it gets, because a computer like this won't solve it. It'll have to be someone with a lot of money like this. And this makes it more centralized in a sense. So now let me talk about proof of stake. Proof of stake is actually kind of like, you could think about it like they call it staking. It's like dividends. So instead of everyone being instead of the miners being the one validating the system, it's everyone that runs the Ethereum blockchain. And so the transaction fees are just randomly given to the people that hold Ethereum. And this is great because it makes it more energy efficient. It's a lot cheaper to mine because you just have to have your computer, you just have to own Ethereum in a sense. So it's extremely cheap to mine new Ethereum, which means if it's cheap to mine, it's cheaper fees. You are the miner. You don't have to buy all this expensive equipment to get in, because right now you have to have thousands of dollars to front just to become a miner and earn a little bit of money, because you're competing with the big dogs. And this, everyone's fair. It's an equal playing ground, so it's a lot easier. The reward is randomly given to its currency holders. So as long as you hold it, you are basically verifying the network. And since there's really no miners, you just have to hold 51% of the currency, of the Ethereum currency, to basically hack it. And like I said, everything's basically, it's very visible. Like I said, it's transparent but anonymous. So we could see how much of the Ethereum coin these people are holding. And it would take billions upon billions of dollars just to get 51%. It's not in their favor. If they want to have 51% of the coin, they're going to have to drive up the price. And this isn't good because they're just paying more than it's actually worth. So this is why it's really hard to hack both of them. Let me just say it's extremely hard to hack them, and it's not in their favor to hack them. it's more decentralized. This is a really big thing about Ethereum's proof of stake network, is because you could be this and still mining Ethereum, and that's why everyone's a miner. So the more people that are mining, the less centralized it becomes. Now, there's disadvantages to this, and I would say the main one is the technological risk. Because before everyone was competing in proof of work to get the Bitcoin, you're not competing. So there's no incentive to get the best computers in the world the best farms to do this. You could just, everyone will just have really crappy laptops and they could be running it. And this does not make it secure. It makes it less secure. I'm not going to say it's not secure, it's just less secure. And so, yeah, moving on. Now, I'm going to talk about why I think cash is trash. And this was said by the world's largest hedge fund manager, I think in January. Now, you might be asking, I thought this was a Bitcoin video, not a US dollar cash video. And the reason I'm going to be talking about this is because although Bitcoin has value, it becomes more valuable the less valuable currencies around the world are. And since cash is literally, quite figuratively, becoming trash, Bitcoin's value is going to intrinsically go up. And now the reason why I'm saying cash is trash is right now the US Federal Reserve, to fight this coronavirus, is spending $960,000 a second. Or they're printing, I should say, not spending. They're printing $96,000. Or, no, not. Basically a million. I don't know what I was doing. I had a brain fart there. Basically $1 million. And that is never heard of. And this is just going to cause massive hyperinflation. They're denying it right now. They've literally said they're going to be. That's basically what they're doing with the stimulus package of $6 trillion. It's $1 million per second that they're creating out of thin air. Nothing backing it. Nothing. It's not backed by gold. All it's backed by is the U.S. government. The faith that the U.S. government can print more and more money, and that's why it's risky. You could just see, like, my grandma always tells me about how she was working for minimum wage back in her time, and she was getting paid a quarter an hour. And this was actually, I'm not going to say a livable wage, but it was, what can you buy with a quarter an hour now? You can't buy anything. Back then, you could buy stuff, but this is because the U.S. government and other governments around the world are just printing more and more of their currency every single year. And this basically makes it less valuable. And so that's why what was a whole dollar in value, if you held a dollar back then in 1913, it's only worth 5 cents in 2013. And it's only worse from here. It's probably worth like 3 cents now in 2020 or even less. So, like, why would you want to hold this useless garbage? This is why you should never really save your money, but yet invest. Save it and invest when the time is right. And the time is right now. Another thing is that the world economy is extremely over leveraged on debt. Just look at the U.S. debt right now per citizen. $71,000 per U.S. citizen. The average person doesn't even make $71,000. So it's just crazy. It would take more than a year of their whole salary just to pay off this U.S. national debt. And look at the debt per taxpayer. It's even more. We're at 23 trillion. I think yesterday or 2 days ago, we actually hit 24 trillion. Because, like I said, this presentation was made a little bit earlier. We're at $24 trillion in debt. And it's only getting worse from here. What happens when this debt that the U.S. government has to pay isn't enough, even coming in from the tax dollars? Because we're headed to that point where the interest alone on the debt is going to be, it's basically the only way they could get out of it is by printing a lot more money, which is what they're doing right now. Now, another thing, and I'm going to say one of my last reasonings on this presentation, is because interest rates are zero. In a financial mind, this makes no sense. Interest rates are basically what you get on your loan. So if you go to a bank and ask for $10,000 to buy a car, they might charge you interest like 5, 10, 13%. But right now, the US government's lending out money and they're saying you could pay us back in 20 years the 100,000 that you borrowed for $100,000. And the reason this makes no sense is why would you give away your money in the first place? First of all, that makes no sense. You need some capital incentive to get it back, especially when the value of your money is reducing every single year because the government's printing more. It makes no sense. They'll be loaning out $100,000 and they may receive $100,000 back, but what happens if it defaults? What if their loan defaults and doesn't pay it? They're losing money. It makes no sense. There's risk, and that's why it can't be zero. Another reason is because you're not going to loan $100,000 back out, and say you get it, it's going to be still less valuable. It could be $95,000 that it's actually worth. So it makes no sense. It makes zero sense. And this is the dumbest thing that has ever happened. The only, basically, this interest rate derivative and this financial instrument was created in response to recessions. And basically, the interest rates are normally like 4 to 5% or something like that. And the government's loaning out this money to people at to banks at 4 to 5%. And this slows down the economic growth, which is good because you don't want to have a big boom and bust like we saw in the Great Depression. But the reason it's bad is because, or the reason zero is bad is because we're not in a recession. We did this prior to a recession. So we had it so low that the only way we could go lower is if we go to negative, which is what Europe's doing. Why would anyone pay someone or loan out their money to someone and actually pay them? And that's what's happening. If we go any lower, we're going to have to pay to use our own bank account. Does that make any sense to you? Before you might get like 5% of your off interest putting it into your bank account in like the early 1900s or before that, or yeah, in the 1900s. Now, you might actually have to pay to put your money in. Why would I pay you to take my money? That makes no sense. And that's the only way we could go from here. If we go up, it's just going to hurt the economy more. If we go down, it's going to hurt it even more. So this was a really stupid move and a really flawed one, and you should really look into it if you don't understand what this is. Like I said, I'm not the perfect explainer. I just want to get my information out there because I think it's important that everyone knows. Now, moving on. All I'm going to say is don't trust any government. We saw in Lebanon, or what am I doing? Sorry. I am really dyslexic today. In Zimbabwe, basically there was massive corruption in the government. And they printed so much money so fast that people who worked their whole lives, all their money that they worked for is now worthless. And this is because they printed so much money in such a short period of time. They had the highest amount of hyperinflation like ever. And look at this number. This is a billion, trillion. I don't even know what that number is. Million, billion, trillion. Whatever is after trillion, that's how much it takes just to get $5. And so people are walking down the streets using all this cash to buy bread. You could go on eBay right now and buy a $10 trillion bill or something like that on eBay for dollars. Dollars. It makes no sense. And so when you're working your whole life to get this currency and get paid in this currency, that's basically worthless because the government can print it at any time. There's nothing stopping them. If they wanted to, all of your money can be worthless overnight. And this is why I say Bitcoin's so valuable. This can't happen with Bitcoin. It could only be 21 million ever. We can't print new Bitcoin, but we could print US dollars. And that's what they're doing. They're printing so much that we're seeing hyperinflation at the moment. And it's only a matter of time before people realize this. Another thing is, look at what's happening in Lebanon. Right now, they were restricting people from getting their money out of their own bank accounts. That's so stupid. They wouldn't allow people to take out their own money and out of their banks. This is because the banks didn't have it. What happens when we go through a recession and people want their cash? These banks are loaning all of their money out and they can't give it all back. So when they can't give it back, people are going to start protesting. People are going to start rioting. Now, what the U.S. government did during the Great Depression, because we saw bank runs during the Great Depression, so they made it so banks couldn't over leverage themselves. They couldn't loan out all the money that they were receiving from you and I investing in their banks and putting our money there. And they made it like 20%. But guess what the U.S. government did? They went back to zero. If you gave your money to a bank, they could have zero of it. They're giving it out to other people in the form of loans. What happens if someone defaults on their loans? What happens if the bank doesn't get their money back? Then you don't get your money back. You can't get it out. It's stuck in the banks. And that's just scary. And we could see bank runs. Now, another thing is the U.S. government insures $250,000 in your account. So if the bank collapses, you still have $250,000. Where do you think they get this money from? They print it. They print it out of thin air. So if a bank goes under and loses all your money, oh well, you're still going to get more money from the government and they're just going to print more money. It makes no sense. Here's some scary things that the U.S. government has said alone. A little bit ago, the Federal Reserve tweeted, "We're not going to run out of ammo." Ammo meaning money to print. They're talking about being able to print as much money as they want. The FDIC, which is what the bank is, basically, the federal bank, they're saying, don't pull your money out of the bank. Why can't I pull out my own money out of my bank? That makes no sense. It's my money. I shouldn't have to ask you and beg you for my money back. I should be able to get it whenever I want. And if we have bank runs, you're not going to be getting this money. Just saying. And if you do, it's going to be because of inflation, like a ton of inflation just to give everyone their money. Trump said it's our money, it's our currency, we'll do whatever. Meaning, if we want to lower interest rates even more, if we want to change the reserve balance, if we want to print more dollars, it's our money. We could do it, and we could do it whenever. Last thing I'm going to be talking about on this is actually another case in the U.S. So now, the U.S. dollar used to be backed by gold, and this is what the U.S. dollar gained its value from. Because you used to be able to exchange a certain amount of gold for dollars. So if you wanted your gold back, you just go to the bank and you'll get your gold back. And this is what it was backed upon. But what happened during the Great Depression is the government said they changed the amount the dollar had to be backed by so they could print more money and create economic stimulus. But it's just BS. Let me just tell you that. So the government said, Congress said, you have to have 20% of all notes that are printed. Or no, let me repeat this. You have to have all notes that are printed backed by 20% of the gold in the reserve vaults. So you know what the president did at the time? He said, oh, I can't print more money because I don't have enough gold in my vaults? Okay, so he made it illegal to own gold in the U.S. On April 5th, they made it illegal to own gold. You could not own gold. I think you could own it in jewelry, but you could not own it as an investment. Keep in mind, this is the oldest investment in time. Gold has been around for centuries, and this has been the primary payment for what seems like an eternity. Now, for the government to be saying, if you don't give us your gold before May 1st, they would imprison people, they'd fine people, and they'd make it highly illegal to own gold because they wanted to be able to print more money to bail out the economy because they thought that's the only way to do it. It makes no sense. It makes no sense. So if you think that they can't do that again, they can. If they wanted to, they could make it illegal to own gold yet again, and the government could take it all again and take it away from you, leaving your purchasing power worthless. And they'll just exchange it for crap like this. Yeah, I should probably mention. When they made it illegal to own gold, you would have to trade it into the government for their currency so that the government could have their Federal Reserve balance higher. Keep in mind, let's just say it is still legal to own gold now. They changed this after like 20 years, 20, 30 years. But we don't even know how much gold the U.S. government has because they haven't been actually audited for 20 years. So the government, who knows? The government could even collapse. I'm not saying they will, but just keep stuff like that in mind. Now, I'm going to be talking about this. Watch what they say, or watch what they do, not what they say. And this is because I believe and other people believe in the cryptocurrency community that you are being lied to. People with a lot of money are going to tell you things and then they're going to do the opposite because it helps them gain more money. So let me just play this clip.
More relevant today in this current, in this whole movement that is phase of Bitcoin's revolution.
I'm going to put it on a higher speed.
When I woke up today, I saw the headline that the Mavericks become second NBA team to accept Bitcoin for tickets and merchandise. And I couldn't help but think of this phrase. And that's because right now there is something almost sinister happening in this Bitcoin revolution, something that we're going to try to shed some light on today. And to me, it spells one of the most bullish, most important turning points in this whole movement that is Bitcoin and cryptocurrency. What's going on, Fud Nation, and welcome back. Today, we're going to be opening your eyes to how you're being actively lied to about Bitcoin on a global scale by some of the biggest thought leaders in the world. And of course, if you always want to know the truth, you should follow the money. So follow me on this journey of finding out what the biggest, most influential figures in the financial world are doing versus what they are saying about Bitcoin. Now, briefly returning back to this Mavericks news, as they said, the Mavs will utilize the service provider BitPay to process all Bitcoin purchases. BitPay, the largest Bitcoin processor in the world, offers the Dallas Mavs global fans a seamless experience to purchase tickets and merchandise with the Bitcoin cryptocurrency. Now, this might not seem like big news unless you've been following what Mark Cuban has been saying about Bitcoin.
I hate gold. Gold is a religion. There's some fundamental value to gold, but everything else, it's a collectible. I see gold and Bitcoin as being the same thing.
So gold is useless and gold and Bitcoin are the same thing, yet as the owner of the Mavs cryptocurrency, you're going to start accepting Bitcoin in exchange for tickets and merchandise. Again, you can listen to what they're saying or follow what they're doing with their money. And I find that the latter is by far the more important of the two. We don't have to go very far back in history to find an example of Mark Cuban saying that Bitcoin was a good investment.
If you're a true adventurer and you really want to throw the Hail Mary, you might take 10% and put it in Bitcoin or Ethereum.
So Mark Cuban thinks gold and Bitcoin are useless, yet he believes that you should put potentially 10% of your money inside that asset, as well as he's now accepting it for tickets and merchandise for his professional basketball team, the Dallas Mavericks. Again, follow the money, not what they're saying. But he's not the only one. If we go back a few years ago, we can find Bill Gates talking very positively about Bitcoin and digital currencies as a way to bank the unbanked, among other very positive attributes.
As you put it, makes me think, believe it or not, of Bitcoin, because some people have said, hey, Bitcoin is the answer to those problems. Are you a believer?
Well, Bitcoin is exciting because it shows how cheap it can be. Bitcoin is better than currency in that you don't have to be physically in the same place. And, of course, for large transactions, currency can get pretty inconvenient.
So all of 3 years ago, we have Bill Gates saying that Bitcoin is more useful than currencies in various ways. Wouldn't it surprise you to find out that only a few months later, he joined Warren Buffett and Charlie Munger in calling Bitcoin useless garbage?
On Bitcoin, do you own any?
Somebody gave me some for my birthday, and then a few years later I thought, hey, I'm going to sell that. So no, there's some really good technology in terms of sharing databases and verifying transactions that is talked about as blockchain. That is a good thing. Bitcoin and ICOs, I agree completely. It's one of the crazier speculative things where it's not an asset class. You're not producing anything, and so you shouldn't expect it to go up. It's kind of a pure greater fool theory type investment. So, I agree. I would short it if there was an easy way to do it.
So once again, 2016 Bill Gates thinks Bitcoin is better than currency and an amazingly disruptive technology, very useful for banking the unbanked, among other things. Now, Bitcoin has some good technology behind it, but is completely speculative and is a greater fool theory investment that Bill Gates wishes he could short. Ironically, at the time, he could have shorted it, but I don't think he did. And Mark Cuban and Bill Gates are certainly not the only ones. My good friends Austin and Aaron over at Altcoin Daily just created an awesome video that you should go check out if you haven't already seen it, where they show how Kevin O'Leary has a very secret Bitcoin past. Now let's look at that same clip of Kevin O'Leary being extremely bullish on cryptocurrencies back in 2013 before flipping the script almost entirely in this modern bull run.
Remember that until yesterday, most people around the world never heard of Bitcoin. Bitcoin, for those who don't know it, is basically virtual currency, the same that you get for blasting aliens in a video game, except now traded globally. You can buy Bitcoins with virtually any currency on Earth and convert back into any currency or buy goods and services
Well,
with
we
it.
talked about the story. What really got us talking about Bitcoin was the guy in Edmonton who was selling his house for the first time, wanted 400,000 in Bitcoins.
So I think the best way to look at this is a proxy for the mistrust individuals have of central bankers. If you're willing to take Bitcoin as a currency, a virtual Barbie currency to me, it has no basis, no central banker, no hard asset behind it. But if you don't trust any other currency, this is where you go. So it's essentially what's happening here, Heather. People all around the world are saying, I've had it with my central banker. I don't trust politicians anymore. I'm going to trade with this currency with my computer and my cell phone.
Well, they did that. The reason that Bitcoin shot up was after Cyprus, when they thought the government was going to get the hands on the money in the bank. So people turned to Bitcoins to keep them protected.
So I ignore everything until it gets to $1 billion of market cap.
Okay.
That happened recently with Bitcoin, well over $1 billion in value. So it's here to stay. When you've accumulated a virtual worth of $1 billion and people are willing to trade it and actually buy things with it, turn it back into hard assets. And here's the key, Heather. Owners of hard assets are willing to take Bitcoin. This is here to stay. That's what's going to happen. And no central banker can control it.
So again, Mr. Wonderful now in 2013, very early comparatively to the others in the movement, praising Bitcoin on a variety of merits. Its decentralization, it being accepted for almost any fiat currency around the world, how you can trade it for hard assets. He really outlines the whole argument for Bitcoin in this one video. So wouldn't it surprise you that now 6 years later, he doesn't seem to understand these things at all?
Which is illegal, by the way, but to me it's garbage. Try and do a transaction of $100,000 with Bitcoin. I tried to do some real estate in Switzerland with it once. It is a useless currency. It is a useless currency. That's what I believe. I mean, look, I'm not, I realize people have different opinions, but to me, it's garbage because you can't get in and out of it in large amounts. And everybody says, yes, you can. But what happens is the receiver wants some guarantee. Let's say you want to buy a piece of real estate for $10 million in Switzerland.
Let's just say.
Let's just say. Yeah. And they don't want to use the traditional transfer system, all right? Which is illegal, by the way, because you have to disclose why you're transferring $10 million into Switzerland. They want to guarantee that the value comes back to U.S. currency at 10. You have to somehow hedge the risk of Bitcoin. That means it's not a real currency. That means the receiver is not willing to take the risk of the volatility it has. It's worthless.
2013, Kevin, very bullish on Bitcoin at just $1 billion in total market cap. Now we have Bitcoin at multi-$100 billion market caps, and yet the bull case is now gone. It's now illiquid and impossible to get your money in and out of, or, quote, useless. See how things change as the game gets bigger and more real. But Kevin's not done. He's on a Bitcoin rampage. Just check out this more recent clip when he's discussing it on Squawk Box with Anthony Pompliano.
I want to explore the idea that there's nothing here except raw speculation. No different than when I go to Las Vegas and put my money on black or red on a roulette wheel, because where is the intrinsic value inherent in deploying real capital, let's talk real money here, and putting it into Bitcoin as a storage of value? I get gold. For 2,000 years, including the Romans, they saw value in owning that as an asset class. Tell me why this, which is basically a digital game, that's the way I look at it, has any intrinsic value. When people actually put real money into this, they make no interest, they can't pay their taxes with it, the regulators don't like it, which is always a problem for compliance. And where's the long-term value? Just this idea that they're going to cut the number of units in half cents is such a scam. Like, that's just totally BS.
Well, we've certainly covered a lot of ground here, from Bitcoin being revolutionary, being extremely viable as an asset, can't be stopped, too big to fail, at just $1,000 in price. Now, at $10,000 in price, Bitcoin is a total scam and completely useless. I wouldn't be surprised if Kevin O'Leary has tremendous plays in Bitcoin. As we've seen, people are fighting Bitcoin. And don't forget, first they ignore you, then they laugh at you, then they fight you, then you've won. We have to open our eyes to the fact that some of the biggest powers that be are actively fighting against Bitcoin in a way unlike ever before. We've never had a sitting president say anything about Bitcoin, and just a few months ago, we got real Donald Trump on his Twitter saying, "I'm not a fan of Bitcoin and other cryptocurrencies, which are not money and whose value is highly volatile and based on thin air." We have to see that right now Bitcoin is in a battleground state. People are actively fighting against this. The biggest powers that be, Mark Cuban to Bill Gates, Kevin O'Leary, these are some of the biggest thought leaders in investing in the country, as well as Donald Trump, a sitting president, now actively chastising Bitcoin, which means that this movement has gotten to such a size, such a momentum, that some of the biggest powers in the world feel the need to fight against it, which in itself is a tremendous victory for cryptocurrency. Let's not forget about Jamie Dimon, the head of JP Morgan, saying that anyone who buys Bitcoin is stupid and that they're going to pay the price eventually. Just a few months later, announcing that they're creating their own cryptocurrency for digital payments. Each and every time people are reinvesting in cryptocurrencies, even after they throw Bitcoin under the bus. Remember the saying that first they ignore you, then they laugh at you, then they fight you, and then you've won.
Okay. So I just wanted to show you some of those examples because people lie and people are kind of like, yeah, they're kind of like girls. You never know what they're actually thinking. Or they might say something, but they want another thing. All right, moving on. Let me just say, US investments are not safe either. Right now we have over $10 trillion in corporate debt. And like I said, what happens when companies start to default on their loans? The whole house of cards is going to become tumbling down. A little bit ago, we had over 10 million people in America apply for unemployment benefits in March. How is this government getting this money? They're printing it. We saw the biggest bull run ever since Trump was elected, even after we had a big bull run. You don't think this has something to do with the stock buybacks, which basically reduces the supply of stocks in the market, which should, in theory, always make stocks go up? So you don't think a lot of this has to do with some of those other factors? Some of the interest rates being lowered and lowered every single year? The amount of money we're printing? There's so much behind it that you aren't seeing. And I guarantee you there's much more than I don't even know about. So you just have to be wary. We saw this much of a stock plunge ever. This isn't a recession. This is a bubble. We were in a bubble. And this is what I was telling my parents and people in my family, that I thought we were in a bubble. And look at how fast it plummeted. People might say it's the coronavirus, and it could be. But I think the coronavirus was the needle that popped it. It wasn't the coronavirus that made it go down a third in value in a month. It was the massive over-leveraged companies. It was the massive, there was just so much behind it. And it should not go down by that much. A whole company doesn't go worthless or go down by a third of its value just based off of the next 3 months. It was a bubble and it needed to be popped. And right now you could see the S&P and the Dow's creeping back up again. I believe we're back right around here. We gained a lot of its value right away. That's because the government right now is literally buying back junk bonds, meaning the most unsafe bonds out there, just to prop up this value. Just don't trust this stuff. Do not. Don't let the media fool you. Let's look at the S&P, like I was saying. You can see that despite all these efforts, it really hasn't rebounded all that much. We went down 32%, 33%, almost 34% in a little bit over a month. We gained a lot of that value back. But what's really changed? The coronavirus is only getting worse. Why are stocks getting better? Maybe people still did panic buy, but we rose by 25% in this amount of time. It's just crazy. We've never seen it do it this fast. This was the fastest the stock market has ever dropped. Faster than the S&P, or during the S&P during the Great Recession, the Great Depression, Black Friday. or not Black Friday, Black Monday. Sorry about that. There's so much behind it. It's because we're over leveraged, and I think we're in probably one of the most unsafe situations we've ever been in. Let me think. So let me go on to my next one. My next point is cryptocurrencies are being made by large entities. If there's no value in crypto, then why is it banks like JP Morgan are launching their own coins? Why is it that all these companies are teamed up to make Libra, which is Facebook? Do you really want Facebook and all these companies controlling your currency? I don't think so. I don't even trust the government. The government is making a Fed coin. That's what they're doing right now behind the scenes. Europe is making their own cryptocurrency. China is almost done making their cryptocurrency. All these countries are going cashless. They're going digital, and they're using the blockchain technologies. If cryptocurrency was worthless, why is it we're seeing all these entities use it? Why are they creating their own? Because they see value. The governments are threatened. Around the world, why do you think it is that some countries ban the use of Bitcoin and other cryptocurrencies? Right now, it's illegal in Russia. It's illegal. Most of the cryptocurrencies are illegal in China, but there's still a way. You could get around the system because this stuff is anonymous, decentralized, and so governments would never know. And moving on to my next point. Now, I don't know if I've sold you, but say I did. Where can you buy BTC? Well, you could go on exchanges like Coinbase Pro, which is what I'm using, Binance, Mt. Gox, Kraken, all these. You could use brokers that find the middleman and they get it for you, like Robinhood, Coinbase, eToro. Let me just tell you, if you want to get the cheapest price, you go straight to the source. This is where you'll get the best rates possible because you're going straight there. Brokerage is, they'll take their little fee. I was using Robinhood, and I don't recommend this because this is where I lost most of my money that I was talking about earlier. I lost like $500+ because I realized that Robinhood was a faulty system to use. Basically, what Robinhood did was I would buy Bitcoin or Ethereum on Robinhood. Robinhood would physically store it in their systems, in their databases, and they just credit my account with Bitcoin that they technically own. And the problem with this is because I can't withdraw my Bitcoin. I can't take it out off of Robinhood unless I physically sell it. And it's just not a good situation. It really is. I lost money because of the volatility, and I'm glad I switched over, but it was kind of sad that I used Robinhood in the first place because I wanted to avoid paying fees like $5 to $10 on Coinbase Pro and Coinbase. And let me just tell you, that's stupid. Robinhood charges a little bit of a fee in their background. They don't really tell you much on that, but just keep that stuff in mind. Brokerages are more expensive than exchanges. If you don't want to go physically buy it and actually hold Bitcoin or other cryptos, you could get derivatives. Now, you don't have Bitcoin ETF stocks on the stock exchange, but you could buy mining companies on the stock exchange. So you could get exposure that way. You could get derivatives. They actually have futures on it. So you could bet what the future price will be. You could do options. You could bet against cryptocurrency if you really still think it's flawed. If you want to, do it. But just saying, in my opinion, we're going to have one of the biggest bull runs in history. And I wouldn't go against Bitcoin. It's extremely volatile. You'll get, if you are over leveraged and if you're shorting, especially against Bitcoin, companies will sell your position if it goes too low. So just keep that stuff in mind. Another thing is BitConnect. And that was just a joke. For the people that don't know what BitConnect is, it's basically, right now it's a meme. It's a complete joke. Because back in 2017, people were investing in, it was a Ponzi scheme. And I already told you why Bitcoin's not a Ponzi scheme, but it used Bitcoin to be a Ponzi scheme. Basically, what you do is you'd buy BitConnect, and they would use your money to pay off the other investors, which, if you don't know, that's basically what a Ponzi scheme is. And these people, because the cryptocurrency was going up rapidly during 2017, during this big bull run, and people were making probably like 5% a day or something. On BitConnect, it was so much more. It was like 100% a day, and people were making fast money. So more money was coming in until finally no one was investing. And this was right after Bitcoin dropped in price. Right after it hit 19,000, it just started descending from there. And so people weren't investing in BitConnect, and these people that invested in it lost all their money. It was pretty funny. I heard about it later. I didn't actually know about BitConnect until after, but it seems like everyone in the cryptocurrency community was bashing BitConnect people, and these people were just saying, "You guys are idiots. You have to invest in BitConnect. We made all this money," and then they lost all of it. So it's kind of funny just to hear about that. So don't fall for these crazy, ridiculous scams. Bitcoin should go up in value, but I'm not gonna say it's gonna go up 100x a day. So just keep that stuff in mind. You could actually even physically trade Bitcoin. And so, say you put your Bitcoin on a wallet like this, or a piece of paper like this, you could literally go find someone on Craigslist, exchange the cash, and literally sell it that way. No one would ever know this transaction ever happened. And that's why I say it's really hard to track Bitcoin. So that's the good thing about it. It's your money. You could spend it however you want. If you want to do illegal things with it, you may. I guess that's good and bad, but I like that aspect because I'm libertarian, and most of the people in cryptocurrency, especially Bitcoin, are libertarians themselves. You could literally just trade it with your friend. Say you wanted to give a birthday gift, you could just give them whatever Satoshis, 20,000 Satoshis. You could just gift it to him. And you could just give it to him on a piece of paper, and that'll be put in his wallet once he scans it. So now I'm going to be talking about the wallets. Because no, it's not your regular wallet that you have in your wallet right now. Or that you have on you right now, I should say. Sorry. It's something like this. It's something that looks like a USB, which I actually bought this like 2 or 3 weeks ago for $60. It doesn't do much, but it holds it. And this is also a wallet, so you could get one for free, like this one. All you gotta do is print it and pay for the paper and the ink. Or you could straight up just get one of these. I got one of these because it's safer. I trust it more than this, because if this gets wet and you can't scan it, you lose your Bitcoin forever. And that's why I say it's deflationary in nature. Now, there's 2 different types of wallets. There's cold wallets and then there's hot wallets. This and this is a cold wallet. And the difference is a cold wallet is basically taken offline. So now you can't have hackers hack your wallet. No, like I said, you can't hack Bitcoin, but you could hack people's wallets because say someone leaves their private key information out, it's gone forever. They could get it stolen so quickly because it's basically like a password. This is the public key. This is what people see when you make a transaction, and that's why I say it's anonymous, because are you really going to know who this person is? But in order to send it, you have to have this private key. And so if someone gains access to your private and public key, you're a goner. Just saying. Your stuff's going to get stolen so fast. So that's why it's really important to keep this stuff extremely private. And yeah. Now, another reason why you should have it on a cold wallet is, I think it was 2012 or early 2000s, or I don't know, something like that. 2015. All you gotta know is it was a little bit ago. They had the world's biggest cryptocurrency exchange at the time, which was Mt. Gox. It was hacked. They had a faulty system, and someone or a group of people stole $460 million worth of Bitcoin and other cryptocurrencies back in like 2015 or something like that. And that's before it was a super high price. Today, it would be worth billions of dollars. They don't know who these hackers were. They got away scot-free. And that's why I say, if you take it off the network and use something like this or this, it can't be hacked. It can't be. You need it to be online. So this is not connected to the internet. I have to connect it to a computer that's connected to the internet. And that's the only way someone could take it. Now, what happens if this gets destroyed? This is gone forever. Your whole wealth is gone forever. And that's why you have to keep this stuff in a very safe location and all your information to log into it in a very safe location, because people could steal it, people could break it. There's a bunch of stuff with it. And like I said, right now there's still limited regulations, but let me just tell you, this is quickly changing. We're getting more regulations on Bitcoin and cryptocurrency every year to protect the consumers. So good or bad, it's all depending on how you look at it. So moving on. Now I'm going to go over the disadvantages. I'm not going to just talk about how Bitcoin's great and you should put all your money into it, but a little amount won't hurt you. But with everything, there's disadvantages. So first off, it's still fairly new. It's only 11 years old. So we don't know exactly how it's going to behave in the future, because the US dollar's been around for 100 plus years. Gold has been around for 2,000 plus years. It's never been through a recession. It was created right after the recession, the Great Recession, because Satoshi Nakamoto saw the flaws with the network. He saw all the big banks getting bailed out while the consumers, the everyday consumers like you and me, were getting screwed over. And he learned from this. So it's never been through a recession. It's got a severely steep learning curve. And we can see this because this video is over an hour, I'm sure, at this point. And this is basically the basics of Bitcoin. So it's pretty complex to learn about. I'm still learning new things about it every day. And yeah, it's really hard to learn about. So it's going to keep a lot of people away from it, especially the older crowd. Next, it's also irreversible. So if someone steals your Bitcoin, I hate to say it, but it's gone forever. They get your access to your account information, it's gone. And once the transaction's done, it cannot be changed ever. If you lose access to your wallet, your Bitcoin's gone forever also. I was talking about that earlier. It's extremely volatile. We saw the markets dip during the coronavirus pandemic, and everyone was freaking out. All the stock market dipped quite a bit, like 30%. But Bitcoin did this extremely fast. It dipped even faster, even harder. It's extremely volatile. In the good days, it's doing a lot better than the stock market. In the bad days, it's doing a lot worse than the stock market. It's extremely volatile. So just know that if you don't have the stomach for this volatility, stay out. I still think you should add a little bit and don't look at it and just keep it, because I think it'll be worth a lot more in the future. And you could be sitting on a good nest egg for your retirement. I was talking about the exchange hacks. You really have to get this stuff on cold wallets if you're not going to be using it, because there are hacks and there's no way of getting your money back. So just remember that. Like I said, it's not used as a payment system in most businesses. There are still a fair amount of businesses that accept Bitcoin, but it's because it's slow and, like I said, slow and stuff like that. And not as many people are into crypto. So, yeah. Now let me talk about this. It's the whales and the price manipulation. Now, let me just tell you what a whale and a fish is. No, it's not the sea creature that you see in the water. It actually refers to, in the cryptocurrency community, the people with a lot of money versus the people with a little bit of money. So if you hold a ton of Bitcoins, you are a whale. If you are hold like I don't know, 100 bitcoins and below, which is still a lot of bitcoins, um, you'd be considered a fish or something like that. It's all dependent on what you consider a fish and a whale, but basically these whales can use price manipulation because there's really no there's really no regulation. There's not that much regulation, I should say. So they get away with selling off their Bitcoin at an extremely fast pace, which triggers price actions to lower even more because their people's limit orders are hit. And so there's more sell off and more sell off, and it becomes really extreme. And then what they'll do is after they sell it all, they buy it all back up at an even cheaper rate. And before you even know it, the price is back to normal and you don't know what the hell just happened to you. They had this with Ethereum where it went down like 90%. It went all the way down to 10 cents. Keep in mind, this thing is trading at like $100+ at the time. It went down to like 10 cents because of this stuff. Because there was an extreme sell off by whales who hold a large amount of it, and then they just bought it back up, and you and me are just like, what the hell just happened? So just keep that in mind. It's an extremely divided community. This is because it's protocol based, so if you want an update, everyone has to agree to it, and not everyone agrees to it, and there's a lot of hard forks or different models of the original thing, of the original payment system changed. So there's a lot of people that love Bitcoin, but there's people that love Bitcoin SV, Bitcoin Cash, but in the end, Bitcoin is the most popular in any way. Like I said, there's lack of regulation, but this is quickly changing. There's a lot of scams. Just keep this stuff in mind because it's irreversible. Your Bitcoin will be gone forever if you fall for scams. So just be wary of where you put your Bitcoin. It's not used as a payment system. Oh, yeah. Had that in here twice. So, moving on. Advantages. The hash rate's at an all-time high, so it's more secure than ever. It's permissionless. I don't have to ask the government. I don't have to ask the exchange. I don't have to ask anyone. If I want to get rid of my Bitcoin, I could sell it. I mean, if the exchange has restricted it, that'd be a lot harder, but I could still go on Craigslist and find someone that'll buy my Bitcoin. So there's no permission needed. You don't have to ask for anything. You just do it. It's code, it's round off code, and code is law. It's more secure every year. This is because it's harder to hack every year because the more um, Bitcoin blocks being mined, the harder it is to go back in time and change them. Because then you have to change not only, say, if you want to go back 10 transactions, you're not changing one thing, you have to change 10. You have to go all the way back, and everyone has to accept it. So it's really hard to do it, and it gets more secure every year because the hash rate goes up and the block size goes up, or the block amount goes up. It's decentralized, unlike the federal government. So right now, the government can print as much money as they want because it's their currency. It's not yours. Bitcoin can't, and that's why it's a hard cap. So once there's 21 million, there will never be more, ever, unless everyone on the whole system agrees to it, which I don't think so, because it's really hard to get people to change their minds on something or to decide on something. Try going with your family and figuring out which restaurant you guys want to eat at. It's a hard thing. Now try having millions of users agree upon a system. So it's really hard and it's really slow for these changes, which should help. It's got an extremely loyal fan base. They have people like me that I probably won't sell anytime soon. I'll probably hold Bitcoin for years to come because I love it so much. And there's more people like me. Um, yeah. So these people aren't going anywhere. We saw during Bitcoin's worst day, the only people that were selling were people like traders that had to sell because their margins, they were getting margin calls, which means they literally had to sell their position or the brokerage would do it for them. But what we saw is the people holding their Bitcoins, like one plus, didn't change their size of position. So people, where was I? Yeah, people don't really sell out. It's really hard for everyone to sell out, especially the long-term holders, because they believe in it and they believe in this monetary system. Now, the Bitcoin halving is only 30 days away, I believe, at this point. Sometime in May, we're going to get the Bitcoin newly mined supply cut in half. And this is going to be huge for us because we're going to see an increase in a decrease in the supply, which as long as the demand stays the same, the price of Bitcoin has to go up. So let me just say that. So this halving is a huge event, and a lot of the cryptocurrency community is talking about it. So we might see this have a very parabolic bull run after the halving, not immediately after. A lot of times we actually see a sell-off after the halving because some people don't really understand Bitcoin fully and they think it'll either go up exponentially after the halving or it won't, and they'll sell out if it doesn't right away. It's very slow, which is actually a good thing because it's harder to change stuff. And if there's a faulty system, you have to really, really think about it. So if you want to change the system, everyone has to think about it and everyone has to adapt to it. So if there is a flaw, it will be changed. But we're not going to adapt quite as quickly, which is a good thing. It's deflationary, meaning every year you're going to have more value for your Bitcoin. So that's a good thing. It's nearly impossible to hack. We have over 10,000 miners, 10,000 people verifying that these transactions happened. And keep in mind, no one knows who these miners are. They're scattered worldwide. And so, like, you need 51% of these miners computing power to hack it. They don't know who each other are, so they can't really hack it. It'd be near impossible. It's because it's anonymous. I don't know if you want to go run off with all of your money and leave your family behind. I will never know that, or whatever you want. You could do whatever you want. If you want to become a big-time drug dealer, I will never know about it. I'll know a transaction happened because I could check it on the Bitcoin ledger, but I'll never know who it is. So you're free to do whatever you want with your money. It's open source. So like I was saying, I could see what how much Bitcoin was sent, for how much, and when. I just can't see by who. The volatility is good for people that are volatility is good for people that are trading. Volatility is a good thing for those people because they can make a lot of money really quickly or lose a lot. Just keep that in mind. But just keep in mind the Bitcoin holders are used to volatility. We're used to 5% swings in a day, not like the stock market, which would be extreme normally. So we're not going to be shaken out by volatility like other markets. You could have this as a separate hedge from other markets. So if the global economy goes down, good. This isn't connected to it. It's a separate way of storing your wealth. It's irreversible, meaning that, yeah, that's a good thing if it's irreversible. Because it's harder to hack if it's irreversible. It's harder to do a lot of things. And the irreversibility, although it can be sketchy if something bad happens to you with it, it's ultimately good because if we make one transaction reversible, we can make all of them reversible. And that's just not what Bitcoin was designed to be. We're also seeing a record number of people holding 1+ Bitcoin in their wallets. And we could see this because we know every single transaction that's ever happened and we know all the wallet's account balances. And this is huge. This means more people than ever are holding Bitcoin because they don't trust the current economic system. Um, Let me see. Yeah. Um, and then also it banks the unbanked. I was talking about Africa. These people can't get bank accounts because banks won't really make much money, or if any, off them because they don't have enough money. So we can add these people to the mix, and that's going to be a huge economy booster for Bitcoin. Now, here's why I think you should even buy a little bit of Bitcoin. Less than 0.55% of the world owns Bitcoin. I got that number because we have 42 million wallets active with Bitcoin, with even a penny invested in Bitcoin, and that's out of the 7.58 billion people in the world, according to Google. So that's 0.55%. And let me just say, people with wallets, people that are into crypto, have more than one wallets. I have 3 Bitcoin wallets, so that just paints a picture. So it's not 0.5% of the world that owns Bitcoin. It's significantly less. You could just look at how big it is compared to all these asset classes. Gold is worth $8.2 trillion. Bitcoin's a measly 124 million when this was made. So you could just use this as comparison. It's minuscule, and it's only going to grow from here. The Bitcoin halving is less than 38 days away from when I made this. It's even less now. I think it's like 30. Another huge one, why I think you should buy it, is guess who's taking over all the money soon? The old people are dying off, as sad it is to say, but that money has to go somewhere. And my generation's going to start working, and we're going to have all the money. And my generation, we grew up with technology. We already have a distrust for the banks because of the Great Recession. And this left many people in fear. And we don't see that many millennials. You could look at the numbers. We don't see many millennials putting their money in bank accounts. They don't trust it. What would they trust? Something like Bitcoin, a technology that can't be changed, can't be hacked, and they know it's always going to be there for them. So once my generation starts taking over the money supply, we're going to start taking it out of these junk treasury bonds, putting it into there. We might start reducing the amount of stocks we own, putting it into Bitcoin, reducing the amount of gold. It's just going to go to Bitcoin. If we're taking over the money supply, and millennials and people like me already have this much in it, what happens when we actually start making good money? What are we going to put it in? I'm not going to be putting it into these treasury bonds. I guarantee you that. So that's another bull case reason. All the advantages I said previously. How about the hyperinflation we're going through right now? $1 million is being printed every second by the U.S. government. You don't think that's going to have an economic impact on the value of your dollar? I think it will. You should hedge it with Bitcoin. We have a large number of developers on the Bitcoin network developing new code that could be built on top of the Bitcoin network. And when we have more developers, we have better code and we have better systems to use Bitcoin with. There is no institutional money in it yet. This is because there's limited regulations, so governments in the US are restricting institutions from investing in Bitcoin. So this is just consumer money right now. Just wait till big corporations can start investing in it, and governments. It's just going to inflate from here. It's a security during the hard times. If I own 1 Bitcoin and the US dollar is going down in value or something, I'll always know I own 1 Bitcoin. It's not going to change. Whereas the US dollar, it's not going to be the same as what it used to be in 10 years. It's going to be worth less, and you're going to have less value in it. My 1 Bitcoin is always going to stay valued at 1 Bitcoin. Okay? If Bitcoin would have failed, it would have happened by now. Yes, this is true. It's over $100 billion in market cap. Do you really think it's going to disappear overnight? it's not like a stock like the Lehman Brothers, like a bank that went under overnight because they were doing bad, shady stuff with people's money in their bank accounts, and there was a bunch of fraud with it. Like it just was a bad economic situation. But Bitcoin can't have that. It's a protocol. It's a code. The coding can't do anything bad. People could do something bad with the coding, but the coding can never be changed or can never be. You know what I mean? I'm sorry. Um, it's becoming more mainstream. Every year, there's more and more people that know about it. And with this becomes there's more holders of Bitcoin like me, more miners of Bitcoin, more regulations. And with this, it becomes safer every day. There's more blocks being mined every day, more money being put into it every day. And this is why I say it's the best risk toward asset. It's going to be either extremely valuable or worthless. And I'm going to say 99% sure it's going to be extremely valuable. They're estimating Bitcoin to be worth $100,000 at the end of the next bull run. You could buy a Bitcoin right now for $7,000. What can you get a 12x return on your money in the stock market in a couple years time? Not much, if any. I don't think there's really any other asset class that can do this. And this is because there's not that much money in it right now. We're still in the beginning stages of it. Now is the time to invest. Now, I tried to go over as much as I could. I know I made this video long. So if you want to learn more, I'm going to be sending this video out to people I know, my friends and my family. So if you know me personally, message me and I can teach you more about it and tell you why I think it's valuable. If you don't understand something, you can do that. You could give it a like if you thought it was useful. I don't really care. I'm mostly just doing this for the information to give you guys. I don't really care about this YouTube channel. Read the Bitcoin white pages. This is what the whole Bitcoin system is based off of. These white pages created by Satoshi. Look into many other cryptocurrencies, which are called altcoins, because they still have value. Right now, Bitcoin's the most valued, and I don't think it's going to change. Follow Bitcoin's Twitter because they post stuff about Bitcoin every day that I think is very valuable. I learned a lot of my information from knowledge on YouTube. I watch Altcoin Daily, CryptoLark, Altcoin Buzz, Chico Crypto for all my Bitcoin news fundamentally. And if you want to just basically know what the price is going to be like, it's hard to predict it, but this guy is usually pretty right. So I like to watch him for what he thinks the price will be, but these guys will just tell you all the good news and all the bad news that's happening in crypto. And that's my video. And sorry it was long, but thank you for watching.